Hey, welcome everybody to a new edition of the NewsPour with Jeff, Steve, and Zach. On the agenda today, we're going to be talking about Allstate and Farmers Insurance pulling out of the California home insurance market, Park Hotels defaulting on a $750 million CMBS loan in San Francisco, remote work impact on the office sector, workers not relocating for new jobs, and the new way drug cartels are laundering money and the Chinese are buying real estate. So, just a few topics for this week, but we're going to jump off with Allstate and Farmers Insurance have recently announced they will not offer home insurance in California anymore. They're going to cease accepting new insurance applications. Um, and
By the way, before we jump to that one, didn't
sure.
didn't Farmer's new CEO just get yelled at by by the media and everybody else because the previous CEO said no, stay at home, and this one said no, come back into work. So they now that they that's partly we can segue into your stay at home, in the office space side of things too. So
Yeah.
crazy.
Absolutely. Yeah, it's been an interesting news week over the past few days, including on stuff around real estate. So
I
in
would dare to
terms of
say that the world is on fire. Is that a bad California joke?
well,
Just a
that's
bad everywhere joke.
yeah, but there might be something there, right? I think they let me see, and they pointed to construction costs outpacing inflation, a challenging reinsurance market, but a lot of this boils down to exactly what you just said, California and fires.
Well,
Um,
look, Florida's going through the same thing. Um, they had a hurricane make landfall last year. It was a
Tiny one,
relatively, what's that?
a tiny one.
I was going to say it was a relatively mild event on the scale of hurricanes. I mean, it was 70-mile-an-hour winds. It was an area that doesn't necessarily experience them on the West Coast, which is why it caused, a little bit more damage than normal. But the problem that we're having in Florida, and I don't know what it is in California, that reinsurance market, when you do insurance, they're insuring maybe 10%. They're going out to insurance to the insurance carriers that are covering the 90. And that reinsurance pool, um, there's no laws in place about stopping the clock from abuse. And they've uncovered, at least in Florida, that lawyers are going out and running bill after bill, taking these claims through the process. And they slow roll them and just keep adding the fees and the fees, and there's no cap. So most of the insurance money has not been going to properties or property owners, it's been going to people. And that has been driving the cost of insurance up, at least in Florida. I don't know about California, but I have to imagine that there's something in place that is allowing the system to be taken advantage of that is causing a lot of this headache and heartache for these insurance companies.
yeah, I think you definitely have issues with the regulations and how efficient or inefficient these processes are. And then I think one commonality you get in California, Florida, and some other states is as you increase population size or you bring in new people, you start to develop in areas that are more prone to damage. And I think when you really look at the data, you're not necessarily seeing that the weather's gotten really worse on a historical basis over time, but you're starting to have areas that just didn't used to have any population now having, cons- you know, structures on them that have dollar values attached. So if a hurricane hit a place, 50 years ago that didn't have any buildings in it, and it hits a place now that has, or a fire, you do have the issue of a lot more um, monetary damage. But California, I really do think, as a resident, a lot of this is the mismanagement of the land by the California government. I mean, to make it really, really simple, um, we don't do controlled burns. We don't do cutting. We don't do harvesting. We essentially let our trees
We don't do
die and sit
tax.
there until they ignite.
Dude, that's awful. That's like living in Florida and saying, yeah, we're not going to do anything to build for winds that could be, more than 50 or 100 miles an hour, or we're going to use glass that if you throw a pin at it is going to shatter, right? in Florida, you've got to build to a certain
You do.
code.
That's what impact glass is.
Exactly my point is you have to have. Oh, I think my camera just went out. Oh, cool. I'm
There,
back.
you're back.
Hey. No, but I mean, that's the point is there's codes. And in California, what are you going to do? I mean, to build fire rated buildings, I mean, every house will have to be nothing but concrete. And even then, that just creates an oven. It's not
Well,
really the
it's
same.
also worse in that, say, you are in one of these areas that's got fire risk, which is a great deal of the interior of the state, great deal of the state. My understanding is you can face real challenges just trying to clear the area around your property,
Yeah.
right? You have a tree you want to cut down.
It's literally where I was going. Can't cut a tree down.
Yeah, but the regulations actually, in a way, um, make it hard to prevent fires. This is obviously wasn't the purpose, but the outcome has really been to create a lot of dry fuel out there. And even if you were to try to fix this, there are so many dead trees out there after both drought and mismanagement, that you're looking at years, just to get to a more manageable situation. And I think this kind of goes to a bigger point, which we're going to kind of touch on with our next
What
topic
that
too, is that
Florida's awesome compared to California because
yeah, that would be one way of
Florida
putting
man
it. Yeah.
Hey,
Florida
that's
man
an easy
does
solution.
do controlled burns.
Yeah, let's follow Elon Musk and let's move to Texas.
Well, I think that's really kind of one of the issues I mean, it's one of the reasons we haven't, we tend to look at areas other than California is, we tend to want to invest in markets where we feel like the policy's on our side rather than against us.
Yeah,
And,
sure.
California's become a state where, for businesses and for folks in the real estate business, the system's more fighting you than helping you. And I think, well, this is just certainly all state and farmers feel that way. They feel this is a state that makes it hard to do business there. And I think that's kind of the broader story is California just keeps going in the direction of making it hard to do business.
Well, look, it's probably not too dissimilar from like what Zach indicated on the side of Florida. You're talking about hurricanes here. In actuality, what you're talking about more recently is floods and the impact of flood, the changing in FEMA's actuarial calculations and the charges and costs and who it impacts most. Long story short is if you want to take a real run at this, years ago, wind insurance was picked up by the government, by the government insurance company, which in this case is Citizens. um, you know, Flood is picked up by FEMA. I think the true form of what we're really discussing is kind of what risk do insurance companies want to take on from regulatory pressures, and really from that real underlying I think topic you're meaning is natural selection with regards to forest fires and hurricanes and mismanagement and all the rest of it. um, I think some do that, others don't, especially when regulatory pressures are forcing them to do things they don't want to do.
Well, let me just say one thing to reassure those investors with us that are in Florida with us. Um, our properties are okay. Our insurance is okay. It's something that we've been aware of and ahead of for a long time. And you look back at buildings and building code and everything related to that since the 80s and the 90s, we've been prepared and ahead of the curve. So um, the insurance and the damage is less of a concern because we've been aware of it and we've been building to that standard for 40 years. So I don't want anyone to get nervous saying, "Oh crap, what did I invest in?" No, we know we did it, we took care of it. Florida
Yeah.
is a good market and is easier regulatory wise
Yeah.
than other ones for sure.
Yeah. And I really think the Florida challenge is more of as more people come in the state, how do you manage that? And how do you develop in areas that maybe have more risk? But, Florida is a very different story of California, where we're really, in California, they've taken areas that used to be safe and they've made them unsafe. I mean, it really is,
You're still talking about wildfires?
Yeah.
well, I can tell you, I live here and I am fully expecting a couple times this year to see my sky darkened again with smoke. And I'm not even in an area. But it's just become something you can almost set your clock to. And really, despite the drought challenges, it really has been the government policies that have really exacerbated this problem of not just not allowing controlled burns, but immediately putting fires out and then but just keeping the dead wood there. You don't burn it off, you don't collect it, you don't allow people to harvest it or timber it. Um, I think that plays into our next story we were going to comment
Oh, yeah.
on, which is San Francisco. So, we just recently saw Park Hotels basically announced that they're going to cease making payments on a 725 million non-recourse CMBS loan. And that's tied to two of its San Francisco hotels, the Hilton San Francisco in Union Square and the Park 55 in San Francisco. In making that announcement, they pointed to record high office vacancy, concerns over street conditions, lower return to office than peer cities, weaker than expected convention calendar. Um, but I think this again, and we'll just kind of pop off on this, but the real issue in San Francisco is again city policy. It is far and away the worst downtown market around there, and it just seems a lot of that is correlated to quality of life. People don't want their cars broken into. They don't want to be stepping over human feces and hypodermic needles, and especially in Silicon Valley, there's so many other places to go or be in. You've got so many more options, and really, you're taking a look at one of the most beautiful cities in the world, that now has been seeing, multiple businesses, large businesses, pull out of there, and this is just the most spectacular so far. Seeing a hotel operator basically take a look at two of the premier hotels in the city and say, we're not paying the mortgage. Here's the keys. We don't want it.
I know another guy that did that in another city that had the same problems. I'm not going to drop a name, but I will say they should ask for some pointers from Atlantic City, New Jersey, because that place did awesome, and no hotels ever failed there.
You mean not one of them?
Not one single, maybe one. I don't know which one though. No, regulation is certainly a concern in San Francisco. There's a lot of policy that is, I guess, pro-social, less business friendly. And, it leads to a great quality of life, but not a great necessarily work environment. And a lot of hotel demand is driven by work and business travel as opposed to leisure and lifestyle. So having hotels that are that big in a city that is kind of barren of work and not having a government that is pro work, getting people back downtown and causing a demand for these rooms, it's going to be tough for them to recover those. And that's just kind of the sad truth. I mean, again, yeah, there's a common theme between all the news articles that we're talking about is it seems like there's some regulatory issues that are kind of hampering things. So I don't know if that's a coincidence or, maybe it's the interviewer or the moderator is a little skewed on the articles he likes to pick or she, who knows who it might be. But I'm noticing that. I'm not going to name any names.
No, I hear you. Yeah, no, honestly, yeah, we'll see if this keeps on happening. But honestly, this week, um, California and San Francisco were kind of the ones making a showing. I do think the CMBS problem, obviously, is about more than just San Francisco, but SF is definitely leading the way. I think occupancy on some data I was looking at was, down in most of the worst cities, maybe 9%, probably more 5 to 7 until you got to San Francisco, it was like 25%. I mean, it is.
You remember Florida condo market, Miami condo market in particular. They called it the city of skyscrapers. It was like New York City light, but it was a little. They called it drafty because it was basically floor plates with concrete columns and no walls or roofs, and every building had been abandoned. And you had 30, 50 of them, and it literally looked like a post-apocalyptic movie backdrop of just these buildings that got a quarter of the way built and then just left there. And it was around the 08, 09 crash, and everywhere else in the country saw 5 or 10%, sometimes as high as 15, and I think in Miami it was as high as 30. So it's the same kind of thing. I guess there's winners and losers in every market and in every economic cycle. I guess San Francisco is, kind of the brunt of the COVID and, flight to quality for office and for, pro-business areas, unfortunately.
Yeah, and I think there's multiple things that happened to San Francisco. It had a lot of exposure to venture, and that sector got hit fairly hard. Tech was more likely to kind of go embrace the remote work phenomenon. But really, I mean, when I look at it, I think, the public policy is often not focused on, but that's a big one. I mean, California, I know you guys aren't here, but we basically decriminalized shoplifting. So it's about $950 or so that is a misdemeanor. So you can go in and steal right up to about $1,000. And you're not going to, it's not worth the cops' time. It's not worth anybody's time to promote you. And you've seen retail businesses pulling out of the SF area just because of the cost they're facing.
Hold on a second, if I can.
Mhm.
If I walk into your store and I steal $900 worth of stuff and I'm going to get a slap on the wrist and released and no jail time, if I'm a shop owner and I defend my store, am I then liable for criminal charges greater than the shoplifter?
Yeah.
So I literally have to put my hands up and say, here, please take everything. Yeah, no, that's.
Do you guys remember service merchandise from like the 80s and 90s? I feel like I feel like that's going to be the way that you end up shopping, where it's almost like a glorified one of those machines that spits out sandwiches and chips and drinks. Like you walk in, you see a product behind a some sort of bulletproof screen, you pay for it and it spits it out, or somebody gets it and brings it around.
You're listen, I'm trying to remember. I know Whole Foods pulled out. I think this might have been a Target. I might be not misremembering which chain it was. But in San Francisco, they how you go and buy your razor blades and it's behind the glass things. They put the entire store is that way.
Yeah.
Like in an entire. I think it's a Target. It could be another major retailer, but in San Francisco, the entire store, every aisle, is now like that. So you basically have to have it opened up for you to buy any goods.
Well, that makes it really, really hard to operate a hotel, because at that point I can just break into one of the rooms and stay there, and as long as the room is not over $1,000, I might not be facing big enough criminal charges.
No, you get squatters' rights at that point.
Oh, cool! So I own the building.
But I would say to be like a glass.
I'm getting a little tongue in cheek here.
Yeah. But I think the great thing about this,
not a great policy.
Yeah, the great thing about policy is it can be changed. I mean, there's not any signs it's being changed, but you can't change geography. I mean, San Francisco's got beautiful geography. It's just a beautiful city. All these things are fixable things if they ever decide to fix them. So I think that's kind of the good news. The other good news,
well, Steve, I'm curious before you jump on from that topic is, does that loss or theft, whatever you want to call it, impact the pricing of goods, and therefore inflation?
Yeah, it does. I mean, it's
You're being a smart ass. Candy bar is $1,000.99, right?
Yeah, there you go.
No, I think you are
smart
seeing.
Ass. It's like it's kind of, I'm stating the obvious.
Well, I think it does impact the bottom line. Certainly, retailers that have more exposure to a market like California. The kind of hidden winner in this, and this is probably a topic for another time, though, is like Amazon. So, right, this is a real hit on the brick and mortar guys in California. I think one of the reasons, it's being allowed to happen is the big money here is in the tech industry. And this is actually beneficial to tech. It actually makes it more competitive to just do an online model where you deliver to people, because there is an issue with people stealing people's packages and stuff, but the consumer eats that cost. Um, in the case, so on the online model, the consumer bears the cost for any theft. On the brick and mortar model, the brick and mortar store bears the cost for any theft. And I'm not saying anybody got in a room and planned this out, but it does work out that the people with the most power, with the most say, with lobbyists, there's a situation, a paradigm right now that benefits them at the cost of their competitors.
I have a proposal for you guys as real estate guys. You heard of
Vending
ghost?
machines.
No, I was going to say you've heard of ghost kitchens.
Mhm.
You know, fast food restaurants and restaurants that literally have a kitchen that's in the back of a building, no front-facing store. They make food, gets rented out, and then it gets delivered to people. What about delivery retail? And we just make four walls, no door, no windows. We have all of our merchandise, and we accept orders like Amazon, and we just do local delivery, like local retail.
I mean, isn't that effectively drop shipping?
Sort of. I mean,
Or should I say reverse drop shipping?
it kind of is. I mean, you're just basically taking like a 7-Eleven, and you just don't have customers walk in. You just take virtual orders, and you either deliver it to their door or they can do pickup outside your door. So it's the same thing as like Uber Eats for retail.
Yeah.
Or DoorDash for retail. It's halfway in between Amazon and brick and mortar.
Maybe that's the way to go in San Francisco. Because right now,
Not sure what way is the way to go in San Francisco, except maybe, exit stage left here.
well, that's what everybody's doing. And I'm sure we'll be talking about SF more, because I have a feeling that this $750 million in default isn't going to be the last we get to talk about in that
Well,
particular market.
I do. I mean, I was going to actually ask on that was, and this is just a quick conversation. Is it posturing? Because it's kind of early to the game. Is it posturing from the side of, look, I don't want to deal with this bullshit anymore. I want to deal with the regulatory pressures and all the other crap and theft. I'm out. Unless you can give me a viable reason to stay in. Good luck with your what is it? Your REMIC. Good luck.
So you're basically, again, this is the second time we're going to drop the name, but Elon Musking it. I mean, the guy decided to stop paying his leases across his biggest offices in the 5 major cities that he had, knows he's going to lose the lawsuit. He says, fine, come sue me. By the time we drag it out in court for a year or two, I will have accrued all of my rent and I'll get a discounted payoff because I know you have no choice. Jeff, to your point, the loan is so big that it will destroy the REMIC that it is in. And
Well, you got to define what a REMIC is for the people who don't know what a REMIC is.
You're going to stump me. What the acronym?
Real estate mortgage investment conduit.
That's right.
Is that what it is?
No, you're right. You're right. I have you use these terms and you use them all the time and you use them for 20 years and you just kind of gloss over what they actually stand for at a certain point. So I give you kudos for that. But it's kind of the point. Let's force you to the table. We're going to renegotiate this so that we can salvage the bond rating of your CMBS trust. And all of the money I'm not spending is going to go to the lawsuit, and the lawsuit's going to cost me less than the money I'm spending. I mean, it's a good business move. It sucks for real estate, and you're right, Steve. I don't think it's the last shoe to drop. I think you're going to see this as a tactic across the board until these economic conditions are going to start changing in favor of us as landlords again.
And I think that kind of taking a look at this on a metro basis, market by market basis, there's certainly been markets like we participate in Miami. Miami's done great. We like Charleston, Savannah, so that's done great. So this isn't across the board, but in some markets like Seattle, like Chicago, like Manhattan, but especially San Francisco at just the top of it, we're absolutely going to see that. We are going to see people say restructure the loan on better terms, or you can have the property.
I got one for you that you would never think. Washington, D.C.
Yeah.
Jeff sent me one the other day, basically buying a defaulted note from a lender. And you'd say no way in DC. DC is the most insulated place in the country because that's where they print the money. Even in 08, 09, there was really no pullback to be spoken of. And there was really not job loss or otherwise. And so you wouldn't have properties given back, and they're already being given back in DC too, which is kind of crazy. It's a sign of the times.
Yeah, and so I think that kind of brings us to our next topic, the remote work impact on the office sector. So,
Next.
yeah, office vacancy rates in America are at 18%, a figure last seen in the savings and loan crisis in the 1990s. That's according to CBRE. So that was the news item this week. Office utilization is currently at about 21%, less than half what it was pre-pandemic. So it's been a kind of a muted recovery. Um, Key card swipe company Castles showing U.S. occupancy levels to be about 50% of pre-pandemic levels. Recent study originally published last year is estimated the value of offices around the country declined about $500 billion from 2019 to 2022. And then additionally, they're saying that the push to squeeze more and more people into less office space um, is appearing to also be picking up. So, you know, that was one of the news headlines this week, that remote work is still negatively impacting the office sector.
So look, I will, Zach said, he said pass. I'll tackle some of this because I do think about this regularly. And one of the things that we discussed last time we did this was, without name dropping again, was whether or not somebody's, fanning their own fire so they can create their own problems to fix their own problems. CBRE is giving you information, but what area?
I was going to say,
Ohio? Is it New York?
What class of office?
That's right.
Right.
The
What
key
about
card
economic occupancy? That's a different metric.
The other side, the key card company, I think I read one of these more recently where it was like, thanks for playing the game, but you're basically telling me you're Austin. It was like Austin, San Francisco, LA, all these areas that were really heavily tech related industries occupying large amounts of space. Well, no shit, your occupancy is going to be down because these are the type of companies that should have policies and procedures to be in place for people to work from home. The average company, I don't care if you're Goldman, if you're a little guy, it doesn't matter who you are, you haven't really positioned yourself for work, for play at home long term, or sorry, work at home for long term. And for that matter, I mean, maybe you have, or maybe you've tried to through the pandemic. You still haven't thought of everything.
Yeah,
Well,
I would also say, like,
And
right where
Google, by the
I,
way,
yeah.
who's like got a policy and procedure for it. People that I know that work at Google, who a lot of us probably know, tell us that even their policies and procedures don't catch everything. Imagine if you weren't even a tech company that wasn't even prepared for this.
Well, look, you're talking about swipes, and before you jump in, Steve, and the conversation's just on that swipe. Not every building's wired for it. And at what point of the day are they monitoring swipes? Because in our office building, we only have front door swipes, and from 8 a.m. to 6 p.m., you're not swiping in. And I can tell you, you'd get 0 swipes during an entire office day, 5 days a week. But our building is completely utilized and completely full.
Yeah, it
So
was through the pandemic, and you'd
that's
never known by swipes.
Yeah, I mean, I was going to jump in on that and just kind of pile in on that criticism. In that, I think these articles, they get couched in talking about the office space, but when you start digging into the details, if they present them, or you have to kind of research on your own, they're really talking about the downtown office market. That's what they're really talking about. And if I were to get in my car and drive to San Francisco, what I would see would definitely resemble this article. But if I
What,
walk
piles of
out,
shit and people, homeless people?
oh no, that was last
well,
topic.
Yeah.
yeah,
Sorry.
no, but I mean, like, in terms of the offices there are genuinely pretty empty, and generally not pretty occupied. But if I walk outside my door, I see full offices. But what I see is more of a suburban type area, and what I see is a lot of medical office. There's, yeah, I'm actually not that far from like Netflix and stuff, and that's kind of actually a little bit empty and not that occupied. But that's the exception. Most of what's in my area, um, is not what these types of articles are covering, and that is a huge part of the market. It's part of the market we play in more. So I do think that that's an important distinction, and these articles don't make that distinction between the, downtown high-rise offices, and most of the rest of the offices.
Well, next time you see your guy on Netflix, tell him I have not been a fan of some of the content they've been coming out with lately, and I want to see my subscription dollars put to a little bit better use, please.
You
But,
mean instead of paying $500 million to Adam Sandler? I mean, most of his stuff's been pretty
Look,
good lately.
guy, you back off my guy Adam Sandler, all right?
I like that.
Apparently, I'm announcing it to the world now. He's a guilty pleasure. I've liked pretty much all of his movies, save for a few, which I won't name which ones, but I'm sure everyone could guess.
I even like Grown Ups. Let's be honest, like they're all fun.
Yeah, the one where he played his brother and his sister was not my favorite.
But I think that I know we're having some fun here, but
Yeah, you remember that one now, don't you?
but I am in a little bit of a microcosm because I'll tell you, most of the office space around me is full. It's occupied. It's being used. The one exception there would be Netflix, where those parking lots are still pretty empty. So I mean, I'm literally minutes away from seeing this effect where I can see medical offices doing real, other types of offices doing well, and then there's a big tech company, and I can tell there actually is a lot of remote going on, way more remote than there was pre-pandemic.
Well,
So
sure. I
yeah.
mean, look, and let's be honest though. I mean, let's not. I mean, I'm not even trying to say, or I don't think Zach's trying to be a naysayer on the side of, the truth is that well, office is going to have some people that can do this. Doesn't mean that office isn't going to change, but the idea that office is somehow brick and mortar like banks that died is, I just is, at least for the foreseeable future, is just kind of an unrealistic expectation.
Do you guys watch Succession?
No, I wanted to. I just haven't had the
Steve,
time.
did you?
I did not watch it recently.
All right. Well, I recently finished the whole series. I started late because I hate doing week to week and year to year. So I actually finished it probably a couple weeks after the finale, and I started it, a couple months before the finale. So it was actually nice that I didn't have to wait for anything. But one key thing that they talked about in the show was that they're, traditional media. And traditional media in the age of tech is going to be like the dinosaur. They're going to go extinct. They said all of the operations are going to essentially consolidate into one or two major global players, and the rest of them are going to cease to exist. I don't agree with that in office, but the sentiment is true. There will be a consolidation of some magnitude, but there will also be a change, a metamorphosis of what office is, the same way that retail did. To Jeff's point, retail didn't die. There's more store openings now than there are store closings by a mile, right? It's going to be the same with office. It's just going to be what does that landscape look like and how do we get there? And, kind of to wrap that point up, I mean, we started talking about 18% vacancy factor. What do we think? I think you got to look deeper. I think you got to look at the data set. I think you got to do your own research and stop buying into the hype of the headlines, because I think there's a lot more to it, and you got to use an analytical side to really dig in and dissect what are they really saying or not saying.
Yeah, I 100% agree. I think we're seeing, and we're going to see more headlines that are really looking at where the big problems are, and the big problem and downtown high-rise offices, and especially in a few key metros, have some real problems, and that gets lumped into the entire office space, and that's just not the reality, but it makes for a simple, scary, entertaining story.
Yeah.
News is entertainment to some degree. News is also news.
Now we're way off topic. The news has to have somebody lighting something on fire or shooting something for them to broadcast, and this is, in real estate, this is their equivalent. Oh my God, the end of the world is coming, offices closing down, retail's dying because I am Amazon.
You don't tune into the news to see the birth of a litter of puppies, I mean, it's nice. It's like, oh, but that's not going to get people to keep coming back. The world has to burn, as it were. to be interesting, which kind of sucks. But again, way off topic and a little dark for these conversations. So we'll see if that gets edited out of the final cut there, guys.
Oh, no, we're keeping this pretty edit free and pretty just what our reactions are. So next up on the reactions,
Oh,
this one
good.
actually isn't so negative. It's not quite so much if it bleeds,
It's
it
fun.
leads.
We're talking about
No,
baby
no.
puppies, or like babies and
Nah,
puppies.
not so upside, just kind of more interesting. Um, Workers aren't relocating for new jobs. So, Challenger, Gray, and Christmas recently released a report where they're finding that just 1.6% of jobs seekers relocated for new positions in the first quarter of 23. According to a survey of 3,000. This is down 3.7% from the last quarter of 2022 when 4.6% relocated. In the 80s and 90s, nearly a third of job seekers would move for a new position. This has been falling steadily. They're pointing to the rise in housing costs, and some companies moving to where the talent pools are located, and also the remote and hybrid working conditions that we were just pointing to. We've kind of talked a bit about the remote working trend. I think one here that just jumps out to me is when you got mortgage rates at around 7%. If you already got a fixed mortgage that's well below half that, there's an incentive for you to not relocate and buy a new house.
You know why I go like this?
Mhm.
There was a headline. There was another one of those headlines. Do you guys see that headline?
No,
Golden handcuffs.
Yeah.
is that like a golden parachute?
No, the golden parachute you get paid. The golden handcuffs you're literally stuck in your house
Yeah.
because you got such a good rate. You can't afford the same amount of house rebuying something or somewhere else. You might have more equity, but it's not enough equity to overcome the increase in housing costs you'll face.
Well,
Hence,
I mean,
golden handcuffs.
theoretically, it's not wrong. You mentioned the '80s, so I think back to the last time with massive inflation and interest rates. Interest rates were what, 18%,
Yeah,
19%, 20%. Well, I mean, houses were only 40, 50, 60, $100,000 for basically a mansion at that point. Nobody was buying that. Now they're looking for $300,000 to $500,000 at less than 5% with a dog, a picket fence, and 3.4 kids or whatever it is. I just
Yeah.
I
No,
just
and
don't I don't know where you're getting that anymore.
but you're also like, right, the house prices haven't really fallen much, but the financing costs have. So you're to move, you're not only giving up that low mortgage, but you're now buying less house
yeah.
with the financing you're getting. It's just a lose-lose. So I find it very believable that there's going to be folks that say, I'm not moving, or I can do a remote, but I'm not moving.
Well, the other side I was going to ask, and I apologize for interrupting, kind of, but what was the what I mean, what jobs are we talking about? Are we talking about low wages? Are we talking about people across all career paths? Or it's kind of a broad stroke to say, well, people aren't moving. Well, sure, I get that. But if you're asking me to move across the country for $12 an hour, I mean, I'm probably not doing that because I can't afford to move
I
across the
know
country.
I know a guy directly related to this, and for argument's sake, we'll call him Joe. And if he ever sees this video, he'll know that I'm talking about him. But he originally moved from DC to Chicago for a high-paying job. This is pre-pandemic, and he ended up changing jobs, and he's doing another job where he's actually back where he came from, but he's commuting from Chicago back to DC because it is cheaper in the long run to do something like that than to move back to DC. So, to a certain degree, a lot of people are, like you said, Jeff, the geography of jobs, the moving for jobs doesn't happen nearly as much as it used to. And Steve, to your point, for a lot of reasons, remote work and et cetera, companies coming in, doesn't matter. But I'm also seeing in real time at least one example, and I know of a few others, but it's cheaper to commute than it is to relocate. you
Well,
know. So
theoretically, as population grows too, your employee pool or prospective employee pool may grow for a defined area where may have been just a kind of a small micro neighborhood before. Now it could be essentially half a state.
well, here's another example, and Jeff, I'm surprised you didn't call me out for this, but I commute to and from Florida instead of relocating full time. I spend half my
Yeah,
time in Florida. I live there. I'm a Florida resident. I have a place, but instead of moving full time, I
let's
commute.
be honest,
It's cheap.
that's a personal choice. And by personal choice, I mean your wife's personal choice.
No, we've talked about it. She would move full time. It just is it's cheaper for me right now. And that will probably change at some point, but you know, relocating for jobs is I don't think it's common. Again, I think you have to dig a little deeper as to why. But you know, the biggest thing I think the article actually nailed is housing costs,
Yeah,
interest
I
rates.
agree.
Yeah.
I think that's going to be the big driver here, just because it makes sense. It's logical. If you got a low price mortgage and a nice house, why pay more money for less? People are just not going to most likely be moving as much.
Well, if I
Uh,
had been a real estate broker, I mean,
yeah, yeah. I mean, it'll be interesting to see. What kind of as that
what was that,
unfolds.
Jeff? I don't know. I was talking about you.
Just
Come on.
just an itch. Just an itch.
So I think we kind of clearly felt like when you take a look at, remote work, like decimating the office space, that was a pretty overblown story where,
Yes.
I think this one, it's less dramatic. Maybe it's less entertaining. But to me, this one sounds more factual. It sounds more substantial. I mean, I
Yeah.
buy that higher housing costs are causing fewer people to consider relocation.
Your
Well,
bullet
and
points.
again,
Yeah, nailed it.
I think again too, there's so many variables that are missing from this. Where are you asking me to move from, and then move to, and what's the local amenity base, for where you want me to move? If we're assuming that this is just, from one downtown market, to the next downtown market, okay, fine, sure, I can look at all this in a vacuum, but I just don't think the vacuum that's created by this story necessarily speaks to what the variables are. And I'm not
Yeah, well,
being insincere. I
I
agree
think
with
this
you guys too.
is some people might state this as a rich person problem. Challenger and Gray and Christmas. I mean, it's an executive coaching firm, so I think we're really kind of talking kind of white collar and to some degree fairly successful white collar. Before you're really tackling this, we're not so much talking about blue collar folks that might not even own a house. I think we're talking about people that, and this is why I buy it. I think we're talking about people that most likely have a nice house and they're locked into a pretty good mortgage. And I think when you take a look at those kind of more established people in white collar jobs that are doing fairly well for themselves, I think this is a real thing. I think fewer of
I'm
them are going to be willing to relocate.
what'd you call this, news pour? I'm running a little
Drinking
light
natural light.
on my pour. It is a natural light. Last week was some very good whiskey, so this week I'm taking a natural light, but I'm running a little light. So I mean, before I run out entirely, we got some more topics?
We got one last one.
All right, let's hit it.
Okay, and this one is a little bit more on the sizzle side of the news stuff. Although I buy this story
House
too.
sizzle. Is it like
Uh,
Sizzler Steakhouse?
no, not quite. This is the new model for the cartels laundering money and how a good chunk of that's
Oh,
ending
the
up in
fun
U.S. real
one.
estate. Yeah. So the Chinese organized crime families have taken over money laundering for the Mexican drug cartels. Now this is how this is now working. Back in the day, I guess a few years ago, back in the day, the Mexican cartels were having to smuggle the cash a lot of times back across the border. The drugs would come over, the cash would go back. Now what's happening is the money gets made here in the drug transactions. Chinese money brokers pick up that money, a lot of it from fentanyl, heroin, cocaine, meth, in
Oh,
the
the
form
fun
of,
ones.
yeah, well, the money making ones. Um,
The ones that free up real estate.
yeah. So
Yeah.
so that money that gets picked up as a cash form, and that gets sold to Chinese customers who, remember, China's got a limit on how much money you can legally take
Take
out of
out.
China,
Yeah.
right? So this is all really kind of built as a way around that. So the Chinese money brokers, they pick up those proceeds, and then that cash is sold to Chinese customers who want to spend the money, and a lot of times that ends up in real estate. And then those Chinese customers pay for the cash in China, and the cash in China is used to buy items for export to Mexico or South America, where those goods are then sold, and that turns into cash, and the cartels get the money in cash.
I'd
Uh,
be curious about two things. One, how do you enforce this to minimize the leakage, as it were, right? You know, the skimming, which would happen, which is normally what, 5 to 10%. We've all seen movies. This sounds like it could be any magnitude,
well,
right?
actually, this is one of the reasons why it's becoming the model is because the I don't have the numbers in front of me, but I think the percentage is something like a third of what they used to be. Because one of the things about this model is the Chinese criminal organizations, they're not making their money so much off the Mexican cartels. They are charging that, but they're making most of their money on the Chinese side.
I was going to say
The
on the product
Chinese want to get
development,
their
creation, the goods, everything else. I know it's a genius model, but
yeah.
somewhere, somehow, you've got enforcement issues all along the way. And then if Chinese nationals are buying the real estate, how does that benefit the Mexican cartels?
Well,
With the
so
Mexican
it's hard
cart,
to find
everybody
ownership, but
gets yeah.
remember years ago, and I think it was, the orange dude who shall not be named put kind of a stop to it. With EB5, EB5 was essentially financing, and the majority of the money was coming from China to the tune of hundreds of
I
millions, if
did
not billions.
I did an EB5 deal or two in my day, but they
So,
were legitimate deals. There was legitimate people. The money was not coming from Mexican cartels through China because, you said this has
oh
only been
no,
the
Well,
last few years. So
well, keep in mind the beauty of this scheme is that the money doesn't have to move, right? The money
yeah,
just
never
changes
has to.
ownership. So the money in the U.S., it just changes ownership from the cartel to the Chinese buyer, and then basically those goods getting sold into Mexico or other markets for pesos or whatever, the ownership of that just changes from the Chinese seller to the Mexican cartels.
It's like you get a
So
marker in one place, you trade it in a different place, and this sounds oddly familiar to a banking system that used to exist thousands of years ago, and
yeah,
or
I'm talking
one that somebody's trying to create now called crypto.
well,
yeah, no way, you're
all
both
based on the
right.
same principle.
Yeah, and then
Look, if it ain't
yeah,
broke, don't fix it. It's worked for thousands of years, and it's a really smart system. I mean, I'm not sure how to comment on this. I'm impressed.
yeah, I think this is actually not something to feel good about or happy about, but this is definitely going to
Edit
help
out,
fuel.
please.
What
I'm
was
I'm
that?
I'm not happy. I said it's an impressive system that they've created. I'm not
No,
saying.
no, I'm agreeing with you, and I'm also saying
Well, let
it's
me
yeah.
reverse question you guys. Would you accept Chinese or Mexican money that's here in the United States at this point?
Well, how do you
A real
know?
estate project?
How do you know?
That's
Yeah,
what I mean. Without knowing and without being able to, verify or trace the fund, um, would you be comfortable taking those funds into a real estate transaction?
I think you would just because of how this works. I mean, you end up with a Chinese buyer with money who's not really, not a drug dealer, not necessarily a criminal. They've used this to facilitate getting their money out of the country. You're not dealing with some guy who turns up to your house with a gold-plated AK-47, where you're kind of like, I know what he's up to. I mean, that's part of the problem with this system is it's in terms of at the transaction level, it's really hard to pick it up or see it.
It's theoretically what you're saying. It's a good guy helping out a bad guy.
And then we're helping the good guy.
But by we, who are you talking about? You?
I was talking about Steve because Steve said he couldn't tell, so maybe he'd take the funds. I don't know.
No,
Look,
I
I'll be
think that
honest.
that's yeah.
You're right. It's impossible to tell, and I can't say that I wouldn't take funds. I would, and I am always circumspect. Um, I always try to choose my investors and my partners very wisely and make sure that I know everything I can about them, and try to keep all of my deals above board and do everything exactly the right way, right? But it does add a wrinkle at this point. It makes
Yeah,
it
I
very
mean,
hard to know what you're taking in. So I mean, I don't know.
yeah, I mean, this isn't some Colombian buyer showing up in Miami and saying, I want the first 3 floors of all the condos. Here's the cash, and I don't need to look at it before I buy. I mean,
You mean it's the
this isn't that.
Nakatomi Tower?
Yeah.
Well, look, I mean, you say that, but that happens in Miami and other locales all the time with plenty of rich people that are not related to the underworld or drugs or murder or otherwise. You know, I saw an article today that Lionel Messi is going to move and play for Miami MLS at this point, and he turned down an offer for the Saudis that was going to pay him $400 million a year. And I believe 400 million in the article was a typo. I think it was euros.
No, no, it was the equivalent. It was actually more than what Ronaldo was receiving, which was kind of the tongue-in-cheek side of the
That was
articles.
300. Yeah. So 400 mil a year, and he's going to literally play soccer or excuse me, football, right? Let's show some respect.
You're in the United States. Somebody's gonna fault you.
Okay, soccer.
So maybe Messi.
But the point, thank you, Ted Lasso. The point is, he's gonna sit there and he could walk in and buy 2 or 3 floors a year, and no one would bat an eye. So I mean, not every time is it going to be something nefarious.
Yeah, and I think, this one is yeah, I think it's going to help support some real estate markets, and it's just at the level of individual actors, it's almost impossible to really spot or know this is going on. I think it's really more of a state problem. It's more of a government problem, and so far it doesn't seem um, you know that either government really is super interested in fixing this and solving this.
Of course not. There's tax money to be made, right? So,
Yep, I
so
think yeah.
Steve said that you can't really tell, and it's hard to tell at the level, and as long as you're working with good actors, I mean, how can you ever really know? I said I'm going to try and look a little bit deeper, but who knows? Maybe I take the money. Jeff, you didn't answer.
Look, I think there's two sides to this, and I think one side of me says I don't really know because I don't know that I've been there. Then the other side of me says, well, damn, have I been there? And to your point is, how do you know? I mean, theoretically, we go through what we need to qualify our investors. Their relationships we have between all of us. But the truth is you really don't know. You really don't. You can't know everything. I mean, to your point, you mentioned movies and shows and all the rest of that stuff. Hell, I mean, even in some of those movies and shows, nobody had any idea that anybody was doing anything wrong until it was blatantly obvious. And the truth is, you just can't always know. I always think to myself from this side, maybe this answers the question, is I think to myself, damn, if somebody is this smart, why don't they just do things the right way and they'd make a lot of money? Like, my brain doesn't
do it the
function
right
that
way. Hold on, do it the right way, like
okay.
the political way, and like buying and doing and right.
You know what I mean? The so-called legal way that may or may not be harming somebody. Like, you put this much time and effort into figuring this part out. Why didn't you just go make money? Like, you could have done it. Like, it just seems odd, So I don't, my brain doesn't function on that level. I think to your point, you just don't know, and you try to figure out who you're working with. That's the whole point.
And yeah, I really think this is more of a government issue, and I think probably one of the reasons the government's not doing much to address this is for the U.S. You know, the money is in the U.S. It's getting spent in the U.S. There's kind of an incentive not to put a stop to money getting spent in the U.S. And then for the Chinese, what's the flow? The flow is exported Chinese goods are going to other countries. There's an incentive not to stop that flow.
You found a glitch in the matrix where everybody wins.
By everybody losing. I think he just said corrupt is as corrupt does.
Yeah. I mean, it is, important. I know we all agree on this.
I'm probably going to get a lot of backlash on that because people are going to say everybody wins, and they're be like, what an insensitive asshole, right? Healthcare system could be impacted, people's lives, their health, their well-being. I get all of that, and unfortunately, a lot of people would say that's the cost of doing business, and that's so callous and wrong. I mean, it should be shut down, and they should figure this out. And Steve, you're right. It is a regulation. Again, goes back to being a regulatory issue, right? But there are too many people making too much money at this point and it's too hard to trace it or actually care that people are not going to do anything about it, at least not for the short term, which kind of sucks.
Yeah, I agree.
I mean, it really sucks.
It does suck. And because you always think you're doing something right, and theoretically, you just may not even know.
Yeah, and it's unfortunately it's one of the biggest businesses in this country is illegal narcotics.
Well, and legal. There's that side too.
Yeah, we'll see if that pops up as a future topic. But
come on, we're consuming legal narcotics right now. I mean,
that's what I was talking about. I was talking about alcohol.
There you go.
And the other side was, there's cannabis to discuss as well. So.
Oh, good. Here we go.
We'll wait for that one to pop
that's
up.
big business.
I agree, and that should be a topic for another time because there's a big real estate play related to cannabis on all the different facets. And again, there's a regulatory issue that's preventing it from becoming mainstream in terms of front and center for real estate. So I mean that could be interesting for another topic.
Yeah, we'll have to put it on the line. So I think we are done today. I know you are cooking in your house with the AC has failed today. So thanks for joining us, Zach. Here's to everybody, and we will pick this up in the next issue. We'll come up with some other headlines to talk about.